Hey y'all, Lisa Davis here, trusted banker, and wanted to talk to you guys today about the CFPB. Because as you know, everything's under attack, and the Consumer Financial Protection Bureau is an independent agency. We talked about it one of my other videos. It protects consumers and their money. Well, now it's being, of course, they fired the director, and now the Treasury Secretary is running it, and he has halted all work being done at the CFPB. And so I just kind of want to let you guys know what that looks like, because there's some things that you can do to protect yourself now that there's not an organization out that's going to protect you. And the reason why this is important is because, and it's important and it's unfortunate because a lot of people right now do not remember how the financial industry worked before 2010, which is why we had the mortgage meltdown. And I'm thinking through, and I was a banker for 25 years. So I started banking in the 90s. So I've seen this whole process, but just thinking about how technology is right now, the government that we have in place right now, how the banking system and the financial systems have matured since I first got into banking, and then what led up to the mortgage meltdown. And now that we have so much technology and we have this new type of industry called fintech, there's going to be, and there's no Consumer Financial Protection Bureau that did a lot of work to make sure that consumers were protected and that monies were not scammed and people were treated fairly, right? And so I'll read a little bit from this article, but I feel like I'm going to tell you guys what I'm going to do, because these are the things that I'm going to put into place to make sure that I don't get overcharged for fees, or I don't get scammed, or I don't have any issues, because they're already starting. I just filed a complaint with the CFPB because of the policies that some of these fintech companies have put into play in order to scam you out of your money. I call it a scam. They call it policy, tomato, tomato. But when it takes money from you that you don't owe them for fees, it's a scam. And let me be clear, as a former banker, financial companies make money on fees. They don't make money on you paying them back, and they don't make money on interest rate. As much as we like to think that they make money on the finance charges that they get for interest rates, or the APR costs and the loan costs and the fee costs from the closings of any type of automobile purchase or credit card opening or anything like that, finance companies and banks make money from fees. And so what we are about to see is a lot of fees being charged in very insignificant ways, well, significant to us, but insignificant ways to them. And like I said, I just filed a complaint about PayPal, because PayPal just changed their policy where they're able to just charge you a fee of $2 every single month if you don't reconcile a balance from the previous month. And if you do reconcile the balance of a previous month, you have to reconcile the balance of 2 previous months consecutively in order to not be charged any daily interest. Daily interest is already a problem, but I didn't have a balance. This is a long story. I paid my cards off last year, so I paid all my balances off. But PayPal created a new policy that even if you pay your balances off, we're still going to charge you interest because you paid your balance off without paying off the balance the previous month. So therefore, I started accruing fees and I started accruing interest costs that I had no idea about because I paid my cards off. And so I hadn't even looked at I hadn't looked at anything until I got a notification that my credit score was being compromised. And so I looked and I found out PayPal is still charging me, even though I paid off the account. And I was on the phone with them all weekend, and their policy was rewritten in 2024. And the policy says that if you don't pay the balance off, if you pay the balance off, but you don't pay the balance off the next month, then you will get daily interest charges that are accrued, and they will be put onto the next balance. So they can never offer you a true payoff unless you pay off every month in full. That means that if you need to either pay your balance in full every single month. So if you got a $5,000 credit card and you use $5,000 every month, you need to pay off $5,000 every single month. Otherwise, if you don't and you pay it off the next month because you didn't pay it off the month before and you carried a balance over, which is about 80% of Americans do. 80% of Americans carry balances forward. 80% of Americans carry balances from month to month to month, which you're going to have to stop doing. Their new policy is if you carry a balance month to month to month, but then you decide to pay it off in 1 month, you're still going to accrue daily interest, which is not, you're still going to accrue daily interest for that next month and get charged that, even though you paid off your card in full, you're going to accrue daily interest because you didn't pay it off the prior month. And then if you accrue daily interest, you're going to accrue more interest on that interest. So what happened is I accrued daily interest because I didn't know about their policy change. I found out I had a balance, and then they were charging me interest on the interest. Now, let me be clear. I reported them to the CFPB, and of course, now the CFPB is closed. These are the kind of things that you're going to have to worry about, especially from fintech companies. And PayPal is a fintech company. PayPal is a financial services company. It's not a bank. It has no regulation, period, anyways. And now with these new policy changes and no CFPB, where the CFPB is the Consumer Financial Protection Bureau, meaning that they protect consumers on consumer debt. Credit cards are consumer debt. These fintech places are consumer debt. Automobile loans are consumer debt. These are consumer debt. They're not mortgage debt. They're not installment debt. Everything that's revolving is pretty much consumer debt. And if what just happened to me at PayPal is any indication of what's about to happen, because when I say, I keep reading all the financial news and the banks are jumping for joy that this administration is either shutting down regulatory agencies or weakening them. They're jumping for joy because banks make money on fees. Financial services company make money on fees. So before I read you this article, I just want you guys to be aware of who are the fintech companies. I pulled that up just so you guys can know. There's a ton of them. And the other problem with these guys are there's a ton more being open. So I don't know if you can see this. Okay. So all of these are fintech. They're called financial services company or financial technology companies. They all provide financial services that banks can't provide. Banks are starting to help invest into these type of companies and maybe partner with them because these companies can do things that banks cannot. I said that. I know I said that again. But they're also able to now, and they can't protect your money. These places are not FDIC insured. They can hold your money. But I tell people all the time, do not let these places hold your money. The problem with these places is if Stripe wants to charge you $2 for whatever policy change that they have, and they all put it under policy change, right? We're probably going to start getting a lot of mail from different types of companies that we've signed up for because they're going to have a lot of different policy changes. Matter of fact, I have started getting mail about different policy changes, and I haven't even been reading all of them. I've been getting emails and I've been getting letters in the mail about policy change. My suggestion to you is to stop using all these companies, period. Just stop using them. I know it seems hard, but you don't need to have your money stored on these companies because it's not protected. And we don't know how they're going to start charging, right? Like I said, what I just went through with PayPal, and I kept them on the phone for 5 hours because it made absolutely 0 sense. It made absolutely 0 sense. And then one thing that the lady said to me that really bothered me, that made me feel like, oh, y'all about to mess with my credit now, is she said, well, we report credit based on the, not based on the due date, but based on the opening of the billing cycle. And I talked to her for 20 extra minutes and I said, ma'am, you cannot rate my credit based on the opening of the billing cycle. So what does this mean? This means that if your due date, so I'll give you my perfect example. My due date is the 17th. The billing cycle starts on the 24th and ends that next month the billing cycle started on the 24th and ended that next month on the 25th. Within the billing cycle is the due date. So the billing cycle is what she was saying, that because the billing cycle started, even though I paid my card off in December before the due date of 17th. So my due date was December 17th. I paid my card off on December 12th. but the billing cycle started December 24th. She said because the billing cycle started the 24th and I hadn't made a payment by January 24th, 25th, I was 30 days late during the billing cycle period, which makes absolutely no sense. I haven't read their new policy, but based on credit is reported 30 days out from the due date. So you have to pay your bill by the due date, not the date the billing cycle starts. The billing cycle starts and gives you a period of time where they collect the data of how much money you've spent, accrue all the interest, and calculate out your payment with the finance charges and all that. That is your billing cycle. The other thing that I'm just now realizing is there's no grace period anymore in the billing cycle, because you used to have a 10-day grace between the billing cycle, the close of the billing cycle, and the date of the due of the date of the due of the payment. And just now thinking about it, there's no grace period, meaning that's the period where there's actually no finance accrued and you can actually pay in full without accruing any interest because you've made it within the grace period before the billing cycle completes or something like that. So for her to tell me that credit was going to be impacted based on the due date, based on the dates of the billing cycle, was absolutely crazy. I had to speak to another supervisor. But the thing I'm trying to tell you is I was getting charged interest on interest on interest because I paid off my credit card. I asked them how much was the payoff. I contacted them and said, how much can I pay this card? What I was told the day of is what I paid off. What I was told this weekend, well, ma'am, due to our new policy, we can never quote you a payoff. I said, then how am I supposed to ever pay this card in full? How am I ever supposed to pay it in full if you can never tell me how much I owe? Well, we'll tell you how much you owe at that time, but we'll also let you know, but that's not the final amount, and you might accrue some more interest. Okay, I get that part, but if I call for a payoff, when you ask for a payoff, that's supposed to be keywords to say, I need to know the final amount, the final bill, because I'm about to pay this off and I'm not about to use it. I'm just telling you my story because now that I see everything that's going on, I am getting out of all of these things. Right now on my iPhone, I'm getting a notice that my card, whatever card was stored on there, has expired. I'm not updating my card. I'm not updating my card on my phone. I'm not downloading any apps that say they might have in-app purchases. I'm not putting my credit cards on anything because there is no agency anymore to protect the consumer or for you to report things to when these companies start to skim money off of you. You can report it to your attorney general, but the attorney general is bogged down so much, which is why the CFPB was so instrumental. The CFPB was so instrumental that's why the banks wanted to get rid of it, because the CFPB protected consumers and it sued all the banks that were doing illegal practices, illegal fee practices. They're the ones that got rid of the medical bill collections on your credit reports. The CFPB was the ones, again, that were getting rid of the overdraft charges and making them go from $35 down to $5 maximum. People shouldn't have to pay more than a $5 overdraft fee versus a $35 or $40 overdraft fee. The CFPB was also the ones responsible for saying, hey, Mr. Banker, if you have a customer that makes 5 purchases in a day and she only has $100 in the bank, but she makes 4 $5 purchases and one $100 purchase, don't take the $100 first and make all those 4 $5 purchases bounce, and now you can charge her 4 overdraft fees. Take the charges that fit within to the balance that she has first. So go from the lowest to the highest. That was all the CFPB. Some of you guys are too young to remember. Back in the day, the banks would go and some people would not know their balance, right? People just don't always pay attention to their balance, whatever reason. And people would be out swiping. And so the banks would take the biggest payment and drain the account. And then all these payments would come in after that could have probably fit into the balance that person had. But because they took the biggest payment, they were able to collect maybe additional $200 in overdraft fees because they let all the other things go in after the biggest thing. So these are the things that the CFPB protected you from. With the CFPB now gone, and I just read the article that said the person halted everybody that works there, told them not to do any more legal papers, not to do any more filings, not to do any more regulatory work. Not only is the work that they were supposed to do going to get done, like bringing overdraft fees to $5 and bringing late fees to $8 max, there's a possibility that the things that have been done could be rolled back, right? Or banks could rename it and just do it a little differently. We need to keep in mind banks make money on fee income, not interest rates, right? Not your payments. They make money on fee income. And Bank of America just had a great quarter where they said they made $27 billion. Please understand that is fee income. That is not right. That's just not on loans. The other thing I wanted to mention that I'm going to do to protect myself, I'm not going to have my credit card stored in Apple Pay. I'm not going to use these fintech companies because they don't have any regulation. So that means if you put your bank account information into these things right here, these fintech companies, and for whatever reason they decide to start charging, maybe they might start charging an annual fee of $2 just because they want to, because fee income is how these companies make money. So if they decide, they write a policy that says they want to charge a minimum fee of $1 just for using this fintech software, they can. Or if they say they want to charge additional fees every transaction, they can. There's no maximum now. There's no oversight now. And these are not banks. So they don't have the calculations that we used to do at the banks that would show, like if you're overcharging, like if your fee income is over 5% or 10% of the actual transaction, that's predatory lending. There are no predatory lending guidelines around fintech companies, not yet. So all these companies have no limitations. And when I say if you just go and take the time to look at the former bankers that were subprime lenders that are now either opening their own fintech companies or partnering with people to open up fintech companies or backing fintech companies, you will understand the concern, because they have to find ways to make money. And these companies right here are LLCs. These are LLCs. These are not banks. These don't have a whole lot of paperwork to do to get. I have an LLC that I could say I want to go open up a financial services company that's going to do this, and this, and I can become a fintech company with a cute logo on here and collect your money on an Apple card, on an Apple phone or a Google Play. Do you understand what I'm saying? These are not regulated. These are people that just started an LLC, decided to say, hey, if you attach your bank account to my company, just like Robinhood, I'll help you buy stocks. Fintech companies provide a way for you to do financial transactions. Coinbase helps you buy crypto. It's an LLC. Robinhood helps you buy stocks. It's an LLC. Square helps you collect payments as a business owner. And I don't know what else they do, but it's an LLC. Stripe, again, is not a credit card. It helps you swipe credit cards. It's an LLC. Chime helps you, what does Chime do? Help you fix your credit, store your money, get a secure card. It's an LLC. Venmo helps you transfer money, LLC. I don't know what SoFi does. Plaid, I feel like it's in transactions. Finastra, I used to know what they do, but there's too many of them now. It's just too many of them, right? I can't keep up with all of them. But so that's the things that I'm going to do. I'm going to get rid of my credit cards because there's no oversight protection for credit cards now. So if credit cards want to go back to charging an annual fee, or over the limit fee, they used to charge opening the credit fee. They charge an application fee. If they want to start charging all those fees, these credit card companies, I have some pretty solid ones, but like they will. They can start charging whatever fees they want. The reason I bring that up is because I get 30 credit card applications a week. I get in the mail 30 credit card applications. And when I look at the banks that are providing the credit card applications, I'm like, I don't even know how y'all got my name, but they're like no brand, no name, right? No name banks. When I see a no name bank, the first thing that comes to mind is fees. When I keep seeing this Credit One or Credit something or Capital One, not Capital One, Credit, they look like a real bank, but they're a third party bank, meaning they're backed by a bank that's backed by a bank, right? So that means that they've got several people they need to pay in order to get you to take that credit card. That means that they've got fees instilled in the fees because they got to pay everybody that has backed that credit card. And the fact that I get a like 30 credit card applications lets me know that this country has lost its way and it is bombarding consumers with credit. It is bombarding you and taking all your money to put you in debt, and they're going to fee you to death because everything is fee for service. Everything is a transaction. That's how we make money in this country in the financial services industry. And so I'm just not excited about the fact that that they got rid of the CFPB director. And not only that, I'll read you the I know I've been going on. Let me this guy's a hedge fund. He's a hedge fund billionaire, right? So what this means is, again, when the subprime, and I remember the subprime mortgage meltdown because I worked in it so diligently. That is pretty much how I jump-started my career. And when I say they made us do all of those things that they made us sell to you guys, that was all we had available. All those predatory lending loans, that was all they gave them to us, and we gave them to the public. Like, it's just so crazy. And so a lot of them, when those banks went out of business because of the mortgage meltdown, they became hedge fund people, and they became anyway. So Scott Bessent, he's the confirmed Treasury of the Secretary, the Treasury Secretary. He's confirmed as the Treasury Secretary. They fired the director for the CFPB. And then he went, and now he's the head of the CFPB. He's the acting director. And his staff members were instructed not to commence or settle enforcement actions, nor to issue any public communication of any type. So they're not going to communicate with the public. The CFPB was very transparent. Everything they did was emailed to anybody that wanted to know it, or it was on their website, or they communicated with you, or you could call them. Okay. I used to do bankers conferences. I used to host a bankers conference. They would come and speak at the conference. They would come and give an annual update every year. This was before COVID, to let you know what the CFPB was doing, what they were working on, all of the actions that they put into place, and all of the banks that they had fined. They're very transparent. So now they've cut off all communication. They won't let them do any more research. The directive was made in order to promote consistency with the goals of this administration. And so Bessent, a wealthy hedge fund manager, was already expected to be a business-friendly choice to lead the Treasury. Now he will also lead the CFPB. So he's going to lead the Treasury. That's crazy. So he's going to lead the Treasury and the CFPB. I look forward to working with the CFPB to advance President Trump's agenda to lower costs for the American people and accelerate growth. So what he means, so that translates, so let me translate that in bank talk. I'm going to work with the CFPB to advance President Trump's agenda to deregulate the financial institutions so that they may now do more lending and take the deposits and use those monies to invest in more ways so that the bank can make money on deposits instead of protecting the lending and the deposits of the American people and having the safeguards in place to ensure that if there is a run on banks or if they get too overextended, that they don't go out of business. So they're going to deregulate, and they're also so to accelerate economic growth. Also, with the deregulation of the CFPB, the discriminatory clauses, the equal credit opportunity clauses, those go out the window. And so that means rich people are going to get richer because they're going to be able to get the money. They're going to be able to get the loans. They're going to be able to leverage funds. And not necessarily low income or poor people will get approved for anything, right? That's what that means. To accelerate economic growth, right? The CFPB has several lawsuits underway, including the enforcement actions against Capital One, Walmart, and Zelle. Capital One needs to be sued. Capital One had that big hack. Capital One had that big hack where everybody's things were bouncing. People didn't get their paychecks for a week later. Pay services were stopped. People's bills bounced. Zelle and its parent bank. So the Democrats have been on hiatus or whatever they call it. They come back into session tomorrow. Elizabeth Warren, Senator Elizabeth Warren, this is her baby. It's going to be interesting tomorrow to see what happens at the Senate Banking Committee because she's livid. She is livid. Shutting down the CFPB enforcement actions that are on the verge of delivering money into the pockets of working people is at odds with President Trump's claim that he wants to lower costs for families. It is at odds that he wants to lower costs for families, but Warren knows it's not at odds that he doesn't want, President Trump does not want banks to be fined anymore. When banks are not fined and banks are not held accountable, banks act like rogue loan sharks. They just do. Hence the subprime meltdown. And as a lender that worked during that time, we were forced to do that work. I didn't know. I was young too. We didn't know it was bad. So if they get young lenders in there, you don't understand totally how you're just zooping up people's equity. And people don't get the whole concept of equity. And when I said we had people in there just eating away at people's home equity out of their homes as fees. They charge astronomical fees to do transactions, $10,000 and $20,000 in fees just to do financial transactions because that was the policy of those companies. HSBC was a bad one. Home HSBC, bad. I can name some of the bad ones. They're still out there, actually. So you guys just be wary. I would suggest I will be checking my bank account every day. Because if I see a dollar skimmed off, I want to know where that dollar is going to. I want to know who's in my account because who's going to protect me, right? If the CFPB goes away, the fraud departments at all these companies are probably going to get a little bit less aggressive and a little bit less useful. And if they rewrite policy like what I said PayPal did, PayPal rewrote policy so they could charge you on charges on charges. Then you're arguing with a cycle of foolishness at these fintech companies. So again, I'm taking my money out of the fintech companies. I'll show you the list again, who fintech companies are. And you got to check your bank account every day. Get rid of all the credit cards that are not like real credit cards, right? Even a Capital One. I wouldn't even have a Capital One at this point. American Express is a good card. Capital One just bought Discover, or they're in the process of merging with Discover. So Capital One will own Discover. So I don't know about those two. I do have Capital One. I'm probably going to keep it. I haven't had a problem with Capital One. But if they get to a point where they get money hungry, they'll find ways to charge. You said, hi, where would one start if you want to consider a balance transfer? The balance transfers are all those cards that offer you that carrot of, hey, if you transfer your balance, you'll have a zero interest for 9 months or something like that. So those are credit cards. Balance transfer means you would need to get a credit card that will allow you a balance transfer. However, because the CFPB is gone and because of this money hungry grab we're in, now you're going to have to see if they're going to charge you for a balance transfer. So read the back of all credit cards. Reading the fine print is going to be extra important over the next 4 years. If it offers you a balance transfer, read the back and see if it charges you per balance, if it charges you per transfer, if it charges you for both, or if they give you a window of opportunity where you can transfer for free, right? Everything that you can set, every word is going to cost money, right? Transfer, wire. I mean, everything is going to pay off, swipe the card. Everything is going to cost money now. It's always cost money, but now without Big Brother looking over these financial services entities, and because financial services entities, fintech entities are so easy to open up, now that we've got all these people that used to back the banks are now doing fintech companies, they're going to find ways to charge you that you don't feel it too hard. So I just need to tell you to continue to read the fine print and look at every statement. The other thing that Consumer Financial Protection Bureau did was make them have transparency. What do I mean by that? When you go to their app and you try to find your bill, some companies now just show you a digital bill. They don't let you download a statement. I went round and round with T-Mobile. I want to see my bill. Send me my bill. I could not see a bill. They just said how much I owed. I want to know why I owe that. I want to know why it's inconsistent over the last 3 months and it's kept fluctuating. When you start to see fluctuations, ask to see your bill. If they rewrote their policies where they're saying they don't have to send you a bill through digital media, then you ask them to paper mail you a bill. You're going to have to be more vigilant about your things because people are going to start, I call it scamming. But everything is going to be a cost and they're not going to be as transparent as they once had to be because everything is getting deregulated and the regulations protect the consumer and not the company. So with Consumer Financial Protection Bureau gone, fintech companies are going to find a lot of creative ways. And because so many people are so dependent on digital transfer now and digital money, they're about to have a field day. I can easily see it being the next big fallout because people do not pay attention to digital transactions. It's just I don't know why, but people just do not pay attention. I deposited a check through mobile banking, like all this digital stuff. It was my first time using mobile banking. I took a picture of it and it deposited. I forgot I had that money because I don't see it. Actually being vigilant about physically taking yourself to the bank, physically depositing money, physically getting a balance, and sometimes physically taking cash dollars out the bank keeps you so self-accountable to yourself where you don't waste your money. All this digital mobile deposit, taking a picture of the money, it goes in the account, and you just swipe or no swiping. We forget that that's our money. So to be vigilant, read all the things, read all the statements. Don't let anybody just give you a balance. Read your balances and your whole statement. When you open up any new accounts, which I would suggest don't, I wouldn't be opening up any new debt. I wouldn't be opening up any new debt right now. It's just not going to be pleasant, in my opinion. In my opinion, it's just not going to be pleasant. It's not going to be a pleasant experience unless you've got a lot of money. Like if it's necessary and you live check to check, I wouldn't open up any new debt. I would close all my credit cards except for any that I need, and I would keep mainstream credit cards like a Chase card, like a Bank of America card, and they charge a lot of fees. Chase's fee is a fee whoremonger. Oh my God, Bank of America is a fee whoremonger. Wells Fargo is not safe. Jesus. But okay, listen, pay attention. It's just not going to be safe for your money. It's just not. That's all I know. I really think, we need to get back to cash and carry, but they want us to stay digital. So, I mean, this is what I know, and this is what I'm going to do. Chase and Bank of America are whoremongers when it comes to fees. So you got to pay attention to that. You got to pay attention. I use checking accounts too to pay my bills. You got to pay attention to that. You got to make sure they're not scamming $1 here, $5 here, that it's up to their policy. If they send you new policies in the mail, you got to read through those. If they've decided to charge an annual fee, an application fee, or over a counter fee. I went somewhere, and if you go and talk to a teller, it's a counter fee. Like, you got to be aware of all the fees. Banks and financial institutions make money on fees, not interest rates, not loan payments. It is a fee-for-service industry. Banks charge fee, they make money fee for service. I know we put our money in there to safeguard it, to hold it safe, to store it, or whatever. Banks charge you for everything. They'll charge you to call now. Somebody was telling me, if you talk to me, it's going to be a $5 fee. Or you can go back to the automated system. I'm like, but I got to talk to customer service because my stuff is messed up. Well, if you talk to me, it's just, everything's going to be fee for service. So the more you can cut down on how many digital products you use, the better for you. Financial digital products. Financial digital products. Again, the more you can cut down on financial digital products, the better for you. Again, I'll show you the fintech companies. The less you can use these, the better for yourself, because all of these are going to charge you a ton of money. They're all going to charge a ton of money. They have no more oversight. They're not being monitored anymore. Consumer Financial Protection Bureau is gone. And there's more than just these ones. There's more. I just don't. 110 fintech companies and startups to know. Like, there's a ton of them. Just research all the fintech companies. All these companies are companies. They're all fintech. They all charge fee for service, all of them, fee for service. There's nothing free about them. If you sign up to them and you get your bank account connected to them, you be aware. I don't even know, my bank account was connected to somebody. Google. Oh my God. Google was crazy. I just had to, what did I have to do to get rid of Google? I have Gmail. I have 3 business accounts. I don't know what happened, but Google started charging me for my Gmail and Workspace. And I don't even use the Workspace. I know it started at $6, but eventually it was $12 because I have so many accounts. I was paying like $500 a year for Gmail. I tried to cancel those accounts. Google wouldn't let me because they just had a policy change. And the policy said, when we sent you the policy, that was your agreement to the policy. And because you agreed to the policy at the time you read the policy, we doubled our fee, and that was a contract. So because when we sent you the policy and you stayed with us and you allowed us to double the fee from $6 to $12, that put you in a year contract. So even if you want to cancel services, you have opted into the contract for 12 months, and you must pay that entire 12 months up front. I had 4 of those accounts. I had started going through my business accounts. I had started going through my business checking account, and I kept seeing all these Google $12, Google $12, Google $12. I'm like, I'm paying like $40 a month or something for Google, but I already paid GoDaddy for my URL, and I already paid for a website. So why am I paying Google? So when I got through everything, I went and canceled Google. They charged me $200 up front because they said, by means of the policy that you read, you opted into the contract. When we let you know you opted in, you must pay for that year, whether you want to use that year or not. And Lord forbid, I had also hired somebody. So I had created a user account for the person I hired. At that time, I had already fired them. So they said, even though you canceled that user account, because you started the user account during the 12 months, you must pay for that user account for all 12 months, even though you canceled the user. So I had to pay 12 times. I had to pay for 2 accounts, and I had to pay up a year. So I had all these other Google accounts. So I said, okay, all right, you got me that time, because I needed to get out. So my other Google accounts, the credit cards expired. So I transferred them over to a bank account, and then I closed the bank account. So I did not pay them, I did not keep them, and I did not cancel them. My payment feature expired. They're still emailing me right now, and they keep elongating it. You've got 5 more days before your workspace is eliminated. I don't care. I moved everything out of my email. I downloaded whatever work I had in the drive, and I put it on a storage thing, right? I say all that to say, if I would have canceled the account, they would have charged me 12 months cancellation fee because of a policy. So this is what I'm saying. All these emails that we're starting to get right now, because I noticed there's a lot of uptick in emails about policies for all these financial services company. Please read them. And if you've got credit cards attached to anything, or your bank accounts attached to anything that's automatic withdrawal, please eliminate it. If you get a policy, please eliminate any credit card or bank account access that these companies have to that. Please eliminate it. Everybody is going digital. Everybody is doing ACH, and everybody just wants to take their money right out of your account. I don't like people taking money out of my account. I want to give you the money I want to pay for. I'm not letting you take no money from me. So please try to remove credit cards and bank accounts from any type of systems that you have it attached to. I would even say, you know what I'm saying? Because with the CFPB gone, you don't have a you don't have anybody to complain to, and it's not even because of that. It's because they know that the CFPB, I'm showing you all the fintech companies, it's because they know they have the CFPB is gone now, and so therefore they have been planning for this moment. Because when I say these policy changes have been coming, and they just been coming fast and fast and fast, so just if you have any kind of credit card or debit card or bank account attached to any of these type of fintech companies, please remove it. And if you get a policy change, please read it and please remove any type of payment system that you have with those companies, because they're going to zap your money. And it might not mean anything to you now, but when you get zapped and then zapped and then zapped, eventually, So I'm going to be removing all of my payment systems from all of these systems. So these are all fintech companies. I haven't even heard of a lot of these, and they all have a different they all do a different job and blah, blah, blah. But when I say that these are like the new thing, right? These are the new thing. And so these places are going to be fee servicing you to death. My bamboo. It's just a lot. So, and they all want you to sign in, and they all want you to attach a bank account. And without anybody out here protecting the consumer, what is Discover talking about? Discover, a well-established name in financial services. Whenever you see financial services, it's not a bank. It's dangerous for you right now. I'm just saying. Discover is the goal to be the leading digital bank payment. This right here, not good. Today, Discover's goal is to be the leading digital bank and payment services company. The company serves consumers with a portfolio of financial products and solutions that includes credit cards, online banking, and identity theft protection. Identity theft protection is the biggest scam in the world. If we didn't have all these stupid systems that want you to attach your credit card and bank accounts to, you wouldn't need identity theft protection. Discover started out as a credit card for Sears. Now they are going over into financial service products that includes credit cards, online banking, and identity theft protection. This was a Sears credit card for the uppity buppities. I used to work at Sears in the 80s. Discover card was a Sears card for the upper echelon. So you could issue a Sears card, and then the upper echelon got a Discover card. Now Discover is an online bank. Ain't that a trip? It's too many of them, right? So just be careful out there. Be safe. Watch your money. Check your money every day. Jesus. So you're welcome. Time to clean house on auto drafts. Absolutely. So glad. Yep. Absolutely. Auto drafts and all those things. Yep. Because you never know if they're going to decide to say they want to charge you for charging you, right? That's the thing that we have to start paying attention to. They will start charging us to charge us. So if you have an ACH or an auto draft, or you got your car payment on auto removal or whatever, if they decide they want to charge you an extra $1 or 50 cents or whatever, think about if they got 500,000 customers, it all adds up, right? So yeah, just pay attention. Like, again, I keep telling y'all, when I wake up, most bankers, we check our accounts every day. I check all my accounts every day. All bankers that I know, we know to do this because we know how the banks operate. Consumers have to get used to doing that. You have to check your accounts every day after 8 a.m. Eastern Standard Time. I would say after 9 a.m. Eastern Standard Time. I would check it at like 5 a.m. Eastern Standard Time. Not Eastern Standard Time, your time zone. But I would check it like 5 a.m. But definitely by 9 a.m., I'm checking it again because transactions are starting to process again, right? So you want to check it. You want to check every day to see what's happening. But if you've got things going on where you've set up auto payments, right? Yeah, start checking it and read all the policy changes that are coming. Everybody is having a policy change if you haven't noticed. With this administration, everybody's having a policy change, and it's because of the deregulation, and because these banks and financial services company can now make more money based on the things that we've gotten so used to doing. See, what they do to consumers is they get you used to using these services. They get you used to using these apps. They get you used to using these bill pay. They get you used to using all those things for free. And then in another few months, they're charging you for everything. Bill pay, just go online and pay your bills online. Bill pay is free. Right now, every day, several times a day, at different times of day. Yes, all day, check your accounts. All day, check your accounts. I truly do. I truly do. And I'm starting to take my credit cards off of things. And I'm telling you, if your kids have games and they got your credit cards on those games, get your credit cards off those games, right? And understand the common sense here, right? If you try to go get a reloadable card and put it on these apps, they won't take it because they don't want it to be limited. They know a prepaid card only has so much. They don't want that. They want your debit card to your account or a credit card that they can continue to charge. That's a problem. Why won't you take a reloadable card if I only want to give my kid $10? Why can't I put a $10 reload? They don't want that. They want to be able to go in and go in and go in. So I would just say, I'm not too attached to a lot of things like that. I don't know how kids are doing with these gaming systems, but if you can get your cards and bank accounts off of these systems, I would, because this is not the time. With the deregulation and the policing of these industries is at a minimum now. There's nobody you can complain to. There's nobody to hold anybody accountable. There's no transparency. There's all these policy changes. It's just going to be the wild, wild west out here with dollars floating everywhere but our pockets. They're going to be floating in everybody's pocket but our pocket. Everybody's pocket but our pocket. So I don't know what to tell you. But I got to teach a financial coaching session at 7. I'm a home buyer's class. So I got to get out of here. But I just wanted to say that to y'all. At this point, it feels like we'd want to consider setting up a nothing account where you just add funds for your bills. Yeah, you should. That's what you should have. You should have a checking account only for your bills that nothing's attached to, but that you pay your bills out of. Absolutely. I pay all my bills online out of my account, and I go in and pay my bills. Nothing. I don't have any automatic withdrawals except Planet Fitness. And I can't leave Planet Fitness because I still pay $10. I'm grandfathered in. If I leave, it'll go up to $15. See how they get you? They're like, you can cancel your membership if you want to, but if you do, it'll go up. Now everybody's paying $15. I think I'm still paying $10. So, but you always should have your own bill account where you put money into it. I tell people this all the time because you want to have money where your bills are paid out of, that nothing else is in there. There's several reasons for that. There's several reasons. There's the paper trail. You don't want a lot of stuff coming out of your bill payment account because when you get ready to buy a house or whatever, or when you need to do things, you want to have one account that has minimal transactions but valid transactions. You don't want that to have your Klarna transactions. You don't want MGM withdrawals. Like I go to Vegas. I do not use my regular account for Vegas. I have a Vegas account. You understand what I'm saying? Can't come out my business account and it can't come out my personal account because a Vegas account, like if I go to MGM and I take money out in Vegas or they see anything Las Vegas on a bank account, it's a problem. It's a problem, right? Same with Bingo, same with Klarna, same with Afterpay, same with Affirm. None of that stuff needs to come out of your regular account. So you should definitely have an account. You should have an account where hopefully you get direct deposit and you pay your bills from that, right? Your direct deposit account should really be by itself. And you really should transfer money over to your bill account. And my Vegas account, I have money in there when I go to Vegas. Because if you do things from Vegas, it's just not good. So yeah, you should have a nothing account. Everybody should have a nothing account where you just pay your bills. And that means that if I set up my bill pay and I pay my bill, once that bill is paid, if they go in there to get anything else, there's nothing else to get because there's only enough money in there to pay my bill. Does that make sense? So yeah, you should have a nothing account. You absolutely should. Yep, got that too. All right. Okay, yeah, I have a class in 7 minutes that I gotta get ready for financial literacy again. But thank y'all for watching. Follow me on all channels, Trusted Banker, and I will see y'all again because there's gonna be a lot of stuff going on. Jesus, but y'all have a good night, and I'll see y'all later. Thank you for watching this. Please share. What is it? Like, share, and subscribe, please. I'm trying to grow my channel, and it's the best way to help me grow the channel and help support my channel. I'll be having lots of financial news and yeah, try to keep you guys up to date on things going on. So, all right. Okay. Talk to you later. Bye.